This video will review a few of the assignments in Chapter 10. The first one we'll look at is exercise 10.3, which is number 3 in the list of assignments. The first is calculating net sales. And we need to make sure that we're familiar with this and that you remember how to do it, because we're going to be building on our new income statement for a merchandising business. So this is the revenue portion. We've got gross sales of $38.60, sales returns and allowances of $410, and then sales discounts of $80. So a lot of this is common sense. If we had gross sales of $38.60 and $410 worth were returned, and then we gave discounts of $80, we're going to have net sales of $33.70. So next I'd like to look at exercise 10.9. It's number 9 on the list. We are to prepare a schedule of accounts receivable for Fing Company as of August 31st. So we are given the accounts receivable ledger for the company where its customers are listed. And from this list, we're going to prepare a schedule of accounts receivable. It's pretty simple. First, we'll list B and G distributors. They owe the company $12.40. So that's what we're doing. We're just listing the customer and how much that customer owes the company as of the end of the period, which is August 31st here. The next customer is M. Chang, and they do not have a balance, so there's no need to put M. Chang on the list. Then we've got Hinscliff. Hinscliff owes $14.90, so they'll be next. And Pitts owes $8.38. And then Trendsetters owes $1,018. And that is a total of $45.86. So basically the schedule of accounts receivable is just a list of our customers and what they owe us. And we need to make sure that the total from the schedule of accounts receivable equals the total of accounts receivable in the general ledger, because this is just a detail of that total, so the balances must equal. Okay, next we're going to move on to one of the problems, problem 10.12. This one has everything in it, but I'm not going to do the whole thing. I just want to do maybe through March 1st through the 10th, and we're going to journalize these transactions and then post them to the general ledger and the accounts receivable ledger. So on the first one, we've got Donacci and Company, and we have made a sale on account to them for $1,700 plus sales tax. And it's telling us here that there is an 8% sales tax rate. So on $1,700, the sales tax is going to be $136. So let's get that in the journal. So I'm going to begin by debiting accounts receivable with the name of the customer. I'm going to credit sales, and then I'm going to credit sales tax payable. So the sales, remember, gets credited because it's a revenue account for the amount of the merchandise. So the merchandise we sold cost $1,700. the sales tax was 8%. So that's getting credited because we owe this. We're collecting it on behalf of the state. So we are crediting that to show a liability of $136. So in accounts receivable, we're going to enter the total of the two, which would be $1836. Now we'll post these this journal entry to the ledger and the accounts receivable ledger. Okay, first we'll start with accounts receivable. It gets a debit of $1836. So I'm going to move down to the general ledger, find accounts receivable, enter the date. The journal page number is 7. We debited the account for $1,836. So we have a debit and a debit in the ledger. So we add those together and get a debit of $28.52. And we'll go and put the posting reference in next to the journal entry. Okay, now we need to post this figure a second time to Donacci & Company's accounts receivable ledger. So if we'll scroll nearly to the bottom, we'll see the accounts receivable ledger, and it's posted very much like the general ledger. You just enter the date, the posting reference. It came from journal page 7. We're going to enter the total that we debited accounts receivable for, and then move over the balance. Now notice we've only got one column here for the balance, and we need to know whether that balance represents a debit or credit, so we'll know how to balance out later on. Since this is an accounts receivable ledger, accounts receivable has a normal debit, so this balance is a normal debit. Now normally you would put another posting reference up here, but the system already has it in for us. You put a check mark after you've posted the customer's account. Alright, now we'll give sales a credit of $1,700. So we'll go down to that revenue account sales and put in the posting reference, give it a credit of $1,700, and move the balance over to the credit side because we don't have an existing balance. We'll take the account number and put it in the posting reference section next to that entry. Now we've got sales tax payable of $136 to credit. So it's March 1st. Give it a credit of $136 and move the balance over to the credit side. And then the account number is $231. Okay, the next entry. We have another sale on account to RJ Kabubu for $21.90 plus the sales tax. So the sales tax on $21.90 is at 8% is $175.20. So let's get that in the journal. So we will debit accounts receivable with the customer name to the side. We're going to credit sales and credit sales tax payable, just as we did in the previous entry. The sales tax payable totaled $175.20. The amount that the merchandise was sold for was $21.90. So if we add those two together, the total goes into accounts receivable of $2365.20. So now we will post these, and we'll start with the accounts receivable. We'll go to the general ledger first and put in the $2365.20. Okay, this was March 3rd, same page, $2365.20. And so now we have to balance out. We have a debit and a debit. So So I'm getting a balance there of $52.17.20. And I'm going to go and put the posting reference in. Now it's time to post that a second time. We're going to go down to the customer account, our J Kabubu, and update his ledger. So March 3rd, and we gave it a debit of $23.65.20. So notice, whatever you do to accounts receivable in the general ledger, you're also doing to a customer's ledger. Okay, and the check mark to show that it's posted has already been entered for us right here. All right, next we'll go to sales and enter the credit for $21.90. And I have a credit and a credit, so I add and get a credit of $38.90. So we'll enter the posting reference, and now we'll enter the sales tax entry. It's a credit of $175.20. Okay, and that gives us a total credit of $311.20. We had a credit and another credit to get the credit of $311.20. Okay, so that would be posting reference 231. Okay, on March the 5th, let's see what that entry is. Donacci and Company returned merchandise from sale number 33C for a credit. So we've issued a credit memo to Donacci and Company. It was $40 plus the sales tax. So let's go to our journal. Okay, so a sales return is entered the opposite of the way the sale was entered. Okay, so when we entered the sale, we debited accounts receivable. So now we're going to credit accounts receivable. Okay, and make sure we have the customer name next to it. We're going to, in this entry, the original entry, we credited sales. So now we're going to debit sales returns and allowances. So we don't want to mix any returns in with our sales. So we're going to use the sales returns and allowance account, and that'll be a debit. And now the sales tax payable, we're going to debit that as well because it was credited in the original entry. Okay, so the sales returns and allowances gets the amount of the merchandise that was returned, and that was $40. Sales tax payable gets the 8% on the $40 returned. So 8 times 40 is $3.20. So, oh my goodness, I picked the wrong one, sorry. That should be accounts receivable, Donacci and Company, not accounts payable. And then if we add the total together, this customer is getting a credit for $43.20. So now we will post these. We'll go to sales returns and allowances and give that a debit of $40. And bring the balance over. And this is a contra account to sales, so it has an account number similar to sales but with a 0.1 after it, so 401.1. Now we'll go to sales tax payable and give that a debit of $320. Okay. And now we have a credit of $311.20, and we're going to debit that means we subtract, and we will have a credit balance of 308. Okay, so we had a credit and a debit. We subtract because they're different, and the credit is higher, so it remains on the credit side. So we'll go up and enter the posting reference. And now we will post to accounts receivable in the general ledger a credit of $43.20. Okay, here's accounts receivable. Give it a credit of $43.20. So we have a debit and a credit again, and we need to subtract those. So the balance is going to stay on the debit side, and we'll have $51.74. So we'll go up and enter the posting reference. And now we need to post and update Donacci and Company's account. So it's going to get a credit of $43.20. Okay, so that was the 5th. A credit of $43.20. So remember, this is a debit, this is a credit. And so if we subtract the two, we now have the balance that Donacci owes the company of $1792.80. So we'll go up and make sure the posting reference is there. I'm pretty sure it is. There's our check mark. So now we'll move on to March the 7th. So on March the 7th we had cash sales for the week. Okay, so that's $31.40 plus the 8% sales tax. So $31.40 times 8% is $251.20. So I'm going to enter this very similar to the sales transactions earlier. We have cash, sales, and sales tax payable. Okay, the sales tax payable that we just calculated was $251.20. The amount of merchandise sold was $31.40. So the cash we collected for the cash sales was $33.91.20. Okay, so we'll go ahead and post that. Go down to the cash account, just here, and I think that was the 7th. Oops. $33.91.20 was the debit. I'm going to add that to the $95.86 that's already there. So our balance in cash is $12,977.20. Okay, enter the posting reference. The sales gets a credit of $31.40. Okay. Okay, so we have a balance in sales now of $70.30. And we've got a credit to sales tax payable for $251.20. Okay, so a credit and a credit will add, and we get a balance of $559.20. March 10th will be the last one that I demonstrate for you because I think you'll get the picture. On the 10th, we received payment from Donacci & Company for sale number 33C and credit memo 66. So remember, our original sale amount was $1,700 plus tax, and then they returned $40 plus tax. And notice that they're not telling us what the amount is. We're going to have to figure it out ourselves. So there's a couple of ways we could do that. We can take the $1,836 that's owed here and subtract the $43.20 that was credited, and we'll get $1,792.80. Or we could go down to Donacci's accounts receivable ledger and look at their balance. They owe us $1,792.80. Okay, so when we journalize that, we're going to collect cash, $1,792.80, and offset the accounts receivable owed of $1,792.80. So let's post this now. Cash is going to go up. Okay, and we had a balance of $1,299.77.20. So now we have $14,770 in our cash account. Okay, and now we need to post accounts receivable. That's a credit of $1,792.80. Okay, so we have a debit and a credit. $51.74 minus $1,792.80 is $33.81.20. Okay, we'll put in our posting reference, and then we're going to update Donacci's account. All right, we're going to credit his account now for $1792.80. Okay, so on the 10th, going to credit $1792.80 to offset the debit of $1792.80. So now Donacci's balance is 0.